This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Ryan, welcome to the show. Honored to meet you and have you on. I know that many of our listeners have probably heard of Cardone Capital before, but they may not have. And I know they're going to learn a lot today about who you all are, what you do. But before we do, man, give us a little more about Ryan. How did you get there? How did you get to the seat you're in now?
Yeah, so it's a fascinating story. And Whitney, number one, thank you so much for having me on. I've heard a lot of great things about you. I was actually a commercial airline pilot before I worked for Cardone Capital. I flew for United Express. I've got a lot of time in the airlines, but I always knew that I wanted to do real estate. So my career started as an aviator, as a captain, and then I transitioned. At the age of 30 years old, I said, what's next? And I found actually Grant on YouTube. And when I joined his team, I was the lead captain on a Gulfstream G200. What people don't realize is that when you actually fly for a family, when you fly for somebody, you're with them every single day. And, Cardone Capital, we didn't start out, with 12,000 units or 2 office buildings or where we are today. We actually started out with one deal. It was a $20 million deal. We raised $6 million. The equity was $6 million. The debt was $14 million. And we looked at each other and we said, hey, can we do this again? And so that's really where Cardone Capital started, is we found and we saw that there was a need for real estate. And we found that the entrepreneurs and the business owners and also individuals wanted to have access to these deals. And that was really the start. That was really the birth. Fast forward, I've been with Grant for 9 years. He's an amazing leader. We have an amazing team, and we've grown something where honestly, we feel like we're just getting started.
So Cardone Capital, is it right, just launched 7 years ago?
Yeah, so Grant's been doing real estate for 35 years, but we really started kicking it into gear 7 years ago, where we launched, Fund 1. We're now on Fund 23, but yeah, we launched Fund 1 7 years ago.
And now you're on Fund 23. That's incredible.
Yeah, Fund 23, we've raised over 1.1 billion from retail. We don't do any institutional investors. We do all retail, high net worth, and also, so we have 2 funds, the non-accredited and the accredited. We're on our 4th non-accredited, and we're on, Fund 23 on the accredited side.
Nice. And so You all will do all large multi-asset funds, no single asset syndications. Is that right?
We do both. So some funds have single assets, like on some of these bigger deals that we're doing, for example, one deal is $140 million. We'll just have that one deal where we raise 40 and debt's 100. We'll have that one deal in one fund. But then we also have other funds where it's diversified over a couple different deals, like Fund 4, for example, right? We've got 5 deals in that fund. So it just depends. It depends on the market, it depends on the deals, and it depends on the equity.
Yeah. Well, I wanted to back up just a little bit, though. You started as a pilot, and now you're executive vice president, right? And so how did you make that transition, right? That's pretty big seat change.
Well, it is, but it isn't. As a captain, you're responsible for a lot. Yeah. I feel like I'm the captain of Cardone Capital along with Grant. Some days I play captain, some days I play co-pilot. Either way, Grant, Cardone, and myself, we're really taking a huge charge because we know what we're doing at Cardone Capital is going to change the game. We feel like, I don't want to say like we feel like we're the Robin Hoods of real estate investing, but we kind of do. We feel like we're disrupting the game, and we become the leaders in crowdfunding, and we've done it very simply. We get on Zoom calls. Grant, myself, we're always available. We're pathfinders. So as a pilot, you have a lot of checklists. As a pilot, you're in command of a ship. In real estate, it's the same thing. You have a checklist on how you're finding and sourcing deals. Once you get the deal, I always say, once you find the deal, the work begins. Once you get the deal under contract, the work begins. Once you start due diligence, the work begins. Once you start raising money, the work begins. Once you close, the work begins. Once you sell, the work begins. So it's really, we've taken, and me personally, I've taken a systematic approach. Like when I transitioned from being a pilot to now helping and running Cardone Capital with Grant, it's really, these skills are transferable. And I encourage anybody who maybe is a professional, well, not a lot of people are pilots, right? I mean, but people are attorneys. Some of the greatest attorneys have created equity funds and hedge funds. You look at the history of these big companies and corporations, it's actually not the people who have been in the business who change the business. And I think that's one thing that I bring to this game. I bring a different viewpoint and vantage point to this game that has helped Grant and Cardone Capital grow. And again, I don't take all the credit for myself. I truly don't. Grant and myself, we've been together for 9 years. And when you fly for somebody, you're with them every single day. I always say, it was a running joke between Grant and Elena. Elena Cardone is Grant's wife. We used to say that Grant and I spent more time than Grant and Elena because we were together every single day. We're flying, we're doing events, we're going to deals, we're shopping deals, we're raising money. It becomes the feeling more like family, not just like, oh, we're grinding it out. Because we know what we're building is ultra special. And here we are.
No, that's incredible. I appreciate that, because there's so many, I'm sure, that can relate to your story that are listening and figuring out how they can, get into real estate, right? Like you did. So I know the listeners would love to hear, Ryan, just Cardone Capital's or yours, kind of economic outlook, right? What you all are expecting and are planning for as far as the economy's involved. And then obviously we're going to dive into what you all are doing about it, or how maybe it's changing how you all are doing things. But what do you all expect to happen?
Well, look, the last 24 months, you and me both know the outlook and the economy has changed dramatically. The way we're buying deals, the way we're finding deals, what deals are happening. Really, in the last 12 months, a lot of these big, large commercial multifamily assets, they're down 70% on sales. So guys who have to sell don't really want to, but they got to free up liquidity. And it really depends on what space you're playing in, right? I mean, the mom and pop is different than the big institutions. I think that look, in commercial real estate, the values and the performance and really what all of us look for is the cash on cash return is really highly determined by the leverage, the debt component on the deals. Debt has gone from 3.5% to 4.5% to 5.5%. Now today, I got a quote, it was between 6.5% and 7% all in rate. So whether you're buying on a 5, 7, 10-year leveraged finance piece, it's really going to change the economics and the cash on cash of the deal. So what we're seeing is that people who have to sell are willing to take a discount to recycle the capital. We've actually changed and repositioned the way we're buying deals. We were buying deals with 50, 60, 70% LTV, call it, leverage. Now we're actually looking at deals, buying them fully with cash. So we're looking at a deal saying, hey, we're going to go buy this cash and refinance it in 2 to 3 years. We think that the outlook overall, like we're still big believers in multifamily. Multifamily has been the sweetheart of commercial real estate. It's just now you have to look at it from a more of a longer term standpoint because we were saying it before, guys that had the 2 and 3 and 4 year outlook, when you get caught in these positions in time, it's not great. We've always had a 10-year horizon and a 10-year outlook on all of our funds. And so we've positioned ourselves to continue buying in all cycles. And I think that's a good point. Like you have to buy in all cycles. Timing, you're never going to get it perfect. Like we're buying now. We're going to be buying in 12 months. We're going to be buying in 24 months. And we've also built a huge and fantastic portfolio where we can continue to add and grow to that.
Love that. Appreciate you talking about buying in all cycles and 10-year outlook on every fund. I think that says a lot just about planning, right? And knowing that there's going to be a cycle. It gives you all so many different options by having a 10-year outlook versus a 3-year, right? And, you mentioned buying in cash now and then, refinancing in 2 to 3 years potentially. So speak to how that process works a little bit, maybe for the passive investor listening and thinking, okay, I would love to invest with somebody that's buying all cash. What does that look like for me as the LP?
Well, look, they're bigger deals, right? So I've got a deal right now that I'm working on that's $150 million. So what happens is, we will either use Grant's balance sheet, we'll use a line of credit, or we'll use the money that we've raised. Here's how we do it. We have 2 funds. The non-accredited fund means that if you make less than 200 grand a year, you can invest. In the non-accredited, it's an 80-20 split. You get distributions quarterly. On the accredited side, if you make over 200 grand, you get paid monthly. That's really the 2 biggest difference on our 2 funds. But what we do is we go out and we find these deals, we negotiate the deals, and these are big groups, right? Whitney, you know them. I mean, these are like the top of the food chain, whether it's couple of these groups have 20, 30, 40, 50 billion AUM. They're just recycling capital. the Starwoods and the Blackstones and the big life insurance companies. I mean, these guys, when in every market, they have to sell, whether it's a redemption queue or whatever it may be. But we think of it like this. We're able to raise money from retail investors who have the same viewpoint of us. You want to go buy great quality assets. We're going to buy it all cash because the debt's high. Say we're buying at a 5.75 or 6 yield cap rate going in. It feels like that feels pretty good for big trophy assets. So we're trophy hunting right now, right? We're going to go buy these trophies in these big key cities and states, and we're going to continue to buy this portfolio. But a person come in for 100 grand, 200 grand, 300 grand, 5 million, they could put their money in. And we believe that in 2 years, 3 years, 4 years, we can refinance, pull capital out. The investor still owns the same percentage of the deal. You just pull money out and you can reinvest in the next deal. And we move on to the next deal. So, it's like look at Cardone Capital, we just try to keep it simple. Yeah. When the debt market is out of whack, how do we join forces? And I think this is really important. The crowdfunding has really changed the way that we invest and also how we're able to compete with institutions, because before we could never go and buy $150 million deals one after the other because we didn't have 300, 400, 500 investors all teaming together. Since 2014, the Jobs Act, it's changed everything. Right. We are now acting and operating, Whitney, and you know this firsthand, we are now acting and operating as almost an institution, but it's just with the everyday investor.
Yeah. Yeah, no, I love that. I love just being able to go almost change the game plan way you all were operating, but still pushing forward in a big way. I think you had mentioned at some point that you all plan to double in the next 24 months, right?
Oh, yeah.
And so speak through that goal a little bit and maybe some of the process, how you all plan to do that.
So we plan to do that via raising capital from crowdfunding, but also there's deals that are coming up where there's not as much competition. When the market's really good, you have competition from all the institutions. Right now, these big banks and these big institutions, they're on the sidelines. So whether it's a form of, swapping out and people, look, Whitney, you and I both know that there's going to be some folks who, there's going to be a capital call, there's going to be a capital event, there's going to be refinances. And so, we've positioned ourselves where we can go out and buy a portfolio. We're actually looking at a couple of portfolios right now. We're looking at one-off assets. So we think that when less people are buying, that's actually the opportunity to buy.
Yeah. Yeah.
What's Warren Buffett's quote? What does he say?
What is it? There's so many investing.
Well, what's his quote? He says, invest when other people are fearful.
Oh, that's right.
Right?
When there's blood in the streets, right?
Well, yeah. Even if it's your own, Warren Buffett talks about all this stuff, but it's like, even when people around you, when they're having a hard time and they're struggling on these deals, I mean, it got pretty frothy there for a second.
Yeah.
We think that things are coming back down to normal. And again, it goes back to the horizon. We're 10-year, we could go longer. We're 10, 15, 20, like we're buy and hold investors. So I think for anybody listening, it's like whether this is your first deal, your fifth deal, your 20th deal, you have to buy in a long-term horizon. You can't build a Cardone Capital. You can't build a LifeBridge. You can't build these big companies on a 2 to 3 year runway. Even as a pilot, you want a longer runway for safety. So I always think of things as in runways. If I can pick a 10,000 foot runway or a 3,000 foot runway, I'm going for the 10,000. Right. That's why we always go for the 10-year.
Yeah, no, I love that. What are some of the biggest LP concerns right now that you're hearing, and maybe why it's not true, or why they should be still considering, say, a multifamily investment like you all have, or a fund like you have, even though they may have some fears?
Well, look, fear is one thing, but also people are looking at what the rate of return is in their bank account, right? I mean, people are able to get on a treasury bill, on a T-bill, on their Chase bank account. They're able to get 3 and 4 and 5%. Here's what I'll say to that. What I just said. When other people are fearful, this is actually when you need to step up and say, hey, look, as long as you believe in real estate, like for me, I personally believe in real estate. That's all I invest in. If you believe in real estate and the fundamentals, then now is actually the time to invest even more, because you're buying deals at what I believe, in my opinion, are a discount. So you buy deals when everything's at a discount. You buy the best quality assets. And again, we always hear location, location, location. It actually is not that scary when you're buying the best deals in the best locations, because like places like Chicago, places like Nashville, places like Atlanta, places like Miami, those cities and states, they're not going away. So I think I think the fear component is just a lack of them in us, me personally, not understanding. And so that's why I always double down and triple down and read more and understand more and talk to more people, because I honestly feel like, for me personally, I get more confidence the more people that I talk to, including yourself, across the board. Yeah. So people just need to stay educated. They need to know and truly believe in what they're investing in, and they just need to go back to, what's the horizon? Do you think, Whitney, in 10 years we're going to be talking about not interest rates or the Fed? Do you think we're going to be talking about something different?
Probably something different, right?
probably something different. So I read the headlines and I get the headlines, but I also know that in 10 years, this too shall pass.
Yeah. No, I love that. Everybody talks about location, like you talked about, but hey, if you're buying the best deals, best location, this will pass. I completely agree. And often it's a lack of understanding, right, or knowledge. I think based on where the fear, why the fear is coming, right? It's just a lack of knowledge. And you all, you're educating your investors. You're all putting out a ton of content, just like we do. I think it's so helpful. But let's speak to. You mentioned one way that you all are going to double, and I know a lot of the operators are wanting to hear this as well. But one way you're going to double is by being able to raise a lot of money, right? And what are some of the keys to how you all are doing that so efficiently, right? You said just 7 years ago, right? It's when Cardone Capital started, but obviously not many people have been able to raise the kind of capital and scale the way you all have in that time period.
Well, I think Grant's a brilliant marketer. That's the obvious. What Grant's done is he hasn't pulled the curtain, close. He's actually opened the curtain. He's a very dynamic individual, and a lot of people trust him. Social media, I don't know if you heard, but we just had, we had this punitive class action lawsuit. It was dismissed again with prejudice. So, people love to hate, and people want to build people up, and then they want to hate. So I think that, the truth always, and again, it's what are you investing in? If you're investing in great quality assets, if you're investing in the right products, I think the truth will always prevail. But just going back to the basics, building an audience that, you're very consistent. They know you, they trust you, you're showing everything. We do Zoom calls. This is back to the basics, right? We do Zoom calls every month, 1 or 2 Zoom calls a month with our investors. We give them, the portfolio updates. We have a portal that's been built out. I can go on and on and on about, showing the deal, having the deal, closing on the deal, giving the investor the same deal that we're getting. These are things that, as you create Fund 1 to Fund 23, you learn and you go through. But to just keep things simple, you always start with your power base. If somebody's listening to this and it's their first fund, go out and buy the deal and then backfill it. Just go and raise it. You don't start with non-accredited. You actually start with accredited investors. A lot of people get caught up. They're like, oh, I'm going to go and start all these funds. No. The most important thing is the deal. Once you get a great deal, then you can go and present it to investors, and then you get their money and you put it into a great deal, and now the deal is working for the investors. So I think at the end of the day, just keeping things super simple, and that's what Grant, myself, Cardone Capital, we've done a great job at doing. And so if you could just, I always say copy and paste. If you just model the successful actions and the successful businesses, other people are doing it, including yourself.
Yeah. What are some ways that you talked about, even Zoom calls, with your investors on a monthly basis? What are some ways you all are standing out amongst the competition?
Well, look, we have great resources. We just launched the 401k book, where if people want to convert their 401k without penalty and they want to invest in real estate, they go to cardonecapital.com/401k and they can download a PDF and read how they can actually do it. People don't know these things, right? Like a lot of people, they've worked their butts off their entire life for United or for whatever profession. Maybe that 401k isn't active. They can now convert it to a self-directed IRA. They don't have to invest in stocks, bonds, mutual funds, which used to be the only outlet. Now they can actually take that and put it into real assets and feel good about what they're investing in. So we do those things where we provide resources for people for free. We also do a bunch of free stuff where people can come and build their confidence, build their education. And then we also offer them the Cardone Capital. So I really think it's about hitting different angles to really serve the majority of the investors. We now have it's like 13,000 investors, and they come from some of them come from the events, some of them come from the website, some of them come from CNBC, some of them come from Facebook, some of them come from Instagram. So it's really about covering up the entire marketplace. And who do we all learn that from? We learn that from GC. GC is like, he's got 16 million followers across all of his platforms. He's done a great job at doing that.
Yeah, he's kind of everywhere, that's for sure.
And then Whitney, just to add to that, then what we do is we've actually built out a team. And if you want to dive into this, like I can share with the people on this call, like, we don't just think that people are going to go to our website, cardonecapital.com, and fill out the forms and invest. You have to build out a team called the investor relations team, where, when people are investing in these real assets, they're investing real money. They want to talk to people. They want to see Whitney's face. They want to see Ryan Tseko's face. They want to see Grant Cardone. Like, this is a real business. Yeah. This is a real service.
We were talking about building out that IR team. Why don't you highlight that a little bit? What are the important pieces there on the IR team, maybe some skill sets that they have, and let's keep going.
Yeah, and look, I think when people start really growing and scaling, the one thing that we all find ourselves is we run out of capital, right? So when you buy your first deal by yourself, you're like, oh, I want to do it 100% by myself. You run out of capital, and so you're like, okay, what do I do next? Like, you have to get ultra creative. In 2014, when the Jobs Act passed, and they created these new rules where we can start crowdfunding via 506B and 506C, and you got to follow the rules and non-accredited, you really have to start thinking about teams and processes and systems. So what we did at Cardone Capital is not only did we build out an investor relations team, where it really started with Grant, Ryan, and then we had a few other people, because, guys, when you first start, you got to bootstrap, right? This isn't a get rich quick. This is a get rich over long periods of time. And the most important person in this whole process, I hope I am very clear on this, it is the investor. Mm-hmm. The investor is the most important person in this entire thing. The investor has to make money before the company does. So when you're building out a team and you're building out platforms, what we did is we started partnering with people where they already had a white label, where people can go to the portal and they can see their investments and they can see the deals, because people want to see. When people are so accustomed to, like, the Vanguard and the Fidelity, those accounts, you have to build something out like that. I wouldn't start with that, but I would start thinking with, once you start getting 50, 100, 200 investors, you have to have a portal. Once you have a portal, you have to have a team now where people are calling in, because when people start investing 25, 50, 100, 200 grand, depending on your minimums, they want to start talking to people. So it's via email, it's via phone. I always tell my team, I now have an investor relations team of 13. I've got 30 people. I mean, I call them the SEAL team over here in Aventura, Florida. I've got a SEAL team of 30 people, but 13 of them are fully focused on paperwork, helping people fill out their paperwork, helping people transfer and convert their IRAs into equity trusts or something like that, where they can invest in real estate. And it's full time. Like, they're calling people. We do, each person on the team, I've got 10 people outbound per day. Their target's between 100 and 150 calls per day. So we are calling people and following up. So 1,000+ phone calls are going out from Cardone Capital each and every day. Because, guys, I hate to break the news to you, one ad is not going to raise 5 million. 2 ads is not going to raise 10 million. It is doing an ad, giving free resources, creating funnels, getting leads, and calling them, and then following up, and then explaining. Like, people aren't going to send you 50, 100, 200 grand just by a website. So websites are great. You can show a lot of cool things on websites, but you got to have the people. We built Cardone Capital because we have real people with real phone numbers. Like, I don't give out a 1-800 phone number. I give 305-407-0276. You can call or text me right now. I'll pick up the phone. Like, that's how these businesses are built, and that's how we built Cardone Capital.
Love that. I love just the personal side of that, right? And being willing to do that. You mentioned
everybody else, Whitney, sorry to cut you off. Everybody else is doing the complete opposite. Right. They're saying, hey, go and click this. We just launched this new deal. We just launched this new deal. Let it fill up. Those are the folks that aren't, like, especially in this market we're in right now. You have to even go more on the customer service standpoint, because people are fearful when all the headlines are blood, sweat, and tears.
Yeah, completely agree. You mentioned 10 people outbound per day, 100, 150 calls a day. I mean, that's impressive, over 1,000 calls per day. What's bringing those contacts in? What's in creating all the inbound to even have 1,000 people to call per day?
So like I had mentioned before, the IRA book,
okay.
I've got all my stats. Every single day I've got the stats, right? So we've got Instagram ads, we have CNBC, we've got different resources like the free real estate book, how to create wealth investing in real estate by Grant Cardone. So all of those different things create leads. It's very simple, Whitney. I mean, you know this because, you're successful as well. It's very simple. It's not overly complicated. Give people what they want. People want to invest in real estate. Most people, what they realize is that real estate, when it's not scaled, it's a pain in the ass. When you buy your first 4-plex or 8-plex or 20-plex, you have to manage it yourself because it's so small. I'm not saying don't do that, because if that's what you want to do, you have to do that. You have to go cut your teeth in this business. But what most people want is they want deals now. They want cash flow and passive income now. And maybe they have a business. A lot of our people, they're employees, they're business owners. They just want to invest in these large deals and they want all the benefits. And that's like our company, that's what we provide.
Yeah, no doubt. I love your all's outlook on, just the whole customer aspect, customer relations aspect of it, because I agree so many are just turning the opposite way in a big way. What would you say is your all's biggest challenge right now at Cardone Capital?
Our biggest challenge was over the last 24 months, we've been very patient. The biggest challenge is when you don't have deals, people are, you're raising capital, you're raising money, and they're really truly believing in Grant Cardone. They're believing in Cardone Capital. So I don't think it's really a challenge because we do have a great base, but you have to remind the investors that patience in this type of environment over the last 18 months is really good, because now we're finding deals at a discount. So things are starting to ramp back up. But when you don't have deals to show people, the hardest thing in the world is to raise money without a deal, because people are like, well, what am I investing in? Well, what's it going in? Well, what's going in? And so we did a great job. Like, we launched the fund. It was a $150 million fund. We raised the money, not commits. We raised the money without a deal. But again, it goes back to, you just have to be more of service and explain more for people to know what the vision is, to trust what the vision is, and get their money in line, so that way they are invested in this next grouping of deals that we're closing on. And so we finally have deals, right? We finally have deals because we've been patient that we're working on. We're currently in due diligence on 2 deals. So it's starting to finally break free, and it feels good.
Yeah, you mentioned raising money without having a deal. Are you all taking money in at those times, even when you don't have any place to put it?
Yeah.
Okay.
Yeah, because these deals, the deals fill up. Like, all of our funds are oversubscribed, and so these deals, they fill up ultra quick. So like, if people waited until we had the deal, they would miss it, because all of this stuff's oversubscribed.
And then you all are ready to go pay cash.
And look, honestly, when you go to these when you're playing at the level, like I'm always blown away at what we've put together, because we're talking with the biggest groups, the biggest banks, the biggest life, we're operating on a high level. You have to have the capital ready to be deployed, and you can't go back and say, oh, well, we got 30 days. No. Here's proof of funds. Here's the balance sheet. Here's line of credit. Here's Grant. Grant goes out there and he goes and closes on these deals. And so, you have to have everything ready to rock, because this moment in time, it doesn't wait for anybody. Yeah. I think over the next 12 and 24 months is going to be one of the greatest buying real estate opportunities that we've seen in 15 years.
Yeah, I agree. But
you got to be, you got to be ready. Like, it's not spool up time now. It's go time now.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.